Hello, and we have got some cryptocurrency news for you this morning. First of all, Polygon Founder is thinking about backing meme coins. So that's right, folks. For those of you Matic investors, you might be seeing some high price meme coins on Polygon. That is correct. And I guess he's falling for the meme coin craze too. So the founder, Sandeep Naiwal, weighs in on recent meme coin mania, and he is proposing to back some meme coin projects on Polygon because he doesn't want Polygon to miss out on the meme coin craze. He sees how it's growing Solana, and he wants some of that action. So there's a lot of flack that meme coins have gotten. People are like, oh, they're totally useless, and man, they make crypto look bad. But realistically, we all know that people are in it for money and they like fast growing investments. So basically what he's saying, like, hey, that's actually growing Solana a lot. Let's grow Polygon a lot and get some meme coins in there as well. He suggested that there might be more to the meme coin phenomenon that continues to puzzle the most seasoned investors. I've already said this multiple times. I don't actually think meme coins are bad. Meme coins get you to use the ecosystem, which could be very, very good for your coin in the long run. And I think a lot of people are missing out on that. So in a long form X post on Monday, he let slip that he was beginning to think of meme coins as fractionalized one-of-one profile picture NFTs. I don't really see that. I just think like meme coins are really good for people to get people in the ecosystem. And people are going to buy these things regardless because they want to make money very fast. It usually doesn't work out, but some of those guys do actually stay on the market. So he suggested that such a reality was likely due to a prioritization of fun, speculative thrills and a community among younger generations. Exactly what it is. Kids want to have some fun. Kids just don't really know what the hell to do with their money, which is bad. And of course, they want to have some speculation. And it's not only kids, older people like speculation too. In other words, everyone likes to gamble. And that's what meme coins are. You just throw $50 at it, you have a chance to get like $5,000. That attracts people. And then there's a greater chance of you doing that than the lottery. And there can be more than one winner. Or there can be more than just, 2 or 3 winners. You can actually cash out along the way. And if you play it right, there's actually a lot of money to be made. You're patient, you got to play it right, cash out and not get too greedy. There's a lot of money to be made there. So basically, according to him, PFPs thrive within the Polygon ecosystem thanks to support from Polygon Labs, hinting that Polygon Labs could take the same approach to meme coins. So I do actually think that he is going to support a couple of meme coin projects, if for nothing else, then for the sake of growing Polygon via these meme coins and getting people used to the ecosystem. Getting people used to the ecosystem is very, very crucial if you want your ecosystem to grow. That will get more liquidity in Polygon, which will get more basically people to buy Polygon. So I actually think this is a pretty decent idea, especially heading into a bull run, because people are going to be looking for some of these meme coins. Telcoin has suffered an exploit. That's right, and the price has dropped 40%. No private keys were stolen in the exploit, the developer said, but obviously not very good. They lost $1.2 million, and since Telcoin wasn't a very big project anyways, could definitely hurt them. So the exploiter managed to make over $1.2 million in funds drained from affected accounts, according to messages on Telcoin's community on the Discord online forum. However, there were only from users who never initiated transactions from Telcoin application, the company said. So obviously, security wasn't tight enough. And they developed financial applications such as trading and remittance tools. So this could actually be more serious for them because obviously if you're using these tools, you don't want to get exploited. So it's based on the Polygon blockchain, and it froze its application in the early Asian hours on Tuesday. They said the issue was related to how the application interfaced with Polygon blockchain and that no private keys or sensitive data were leaked. So essentially, yeah, it was the kind of like the bridge to the interface to the Polygon blockchain that was actually hacked, not on the Polygon blockchain itself. They've identified the root cause, which is not an issue with Telcoin wallet code itself, but the proxy implementation of the wallet on Polygon. So they've hopefully eliminated the problem, but it's fallen by a lot because of this hack. It could be a decent time to buy. I mean, I don't know if it can actually get the trust back, and if it can't, then it's probably dead for good. But if it can get some of the trust back, 40% drop would be a pretty juicy time to buy to rack up some profits. Probably wouldn't do it myself. And backing on that, Thunder Terminal was actually hacked. It was only stolen $240,000. And they actually say that Thunder Terminal funds are safe. But the hacker was like, no, 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 bitches. Your coins are not safe. The on-chain trading platform confirmed a third-party compromise has led to funds being drained from 114 wallets. Not a lot, but claims it was already fixed the issue. I wonder if they're going to reimburse those people because it was your platform's fault. So the hacker says, however, it's all lies and is demanding an additional ransom of user data. So he says he actually has access to more user data, and it's more than just 114 wallets on the platform. I guess he wants more than $240,000. I'm not really sure if he's going to get it. He probably has to provide evidence that the user data he has access to, and if he does, then it could be a big problem for Thunder platform. So basically, Thunder assured users that no private keys or wallets have been compromised, but the hacker says it's all a bunch of lies. And the exploit resulted from an attacker gaining access to MongoDB connection URL, which allowed the exploiter to execute withdrawals on behalf of users. So a lot of exploits over the holiday weekend. Some people are not having a Merry Christmas at this point. I do hope that this problem does get resolved, and maybe they'll have to pay a ransom, especially if they want the user data to stay uncompromised. Obviously, the hacker wants people to actually believe otherwise because he says they are indeed compromised. We have so basically like the Thunder guys, like we have all the user data, 50 Ethereum, and we'll delete all the data. So essentially, like, who do you believe? Thunder platform, Thunder Terminal, or the hacker? I don't know if you really want to take the chance. So Thunder said it would be taking extra steps to ensure security and remain open to negotiations with the hacker to have the stolen funds returned. So essentially, like, they didn't really believe this hacker's ultimatum, and they probably froze the money. So the hacker just wants more money. It added that it does not have access to the user's private key, so there'd be no way for the exploiter to gain this item. So the exploiter might have actually just been blowing hot air right now. And hopefully he is just blowing hot air right now, because otherwise there definitely could be trouble. Kyber Network could definitely be in trouble because they had to fire 50% of their workforce 1 month after $49 million exploit. So Kyber is kind of going down the tubes right now. I don't know if they've gained trust back. Their workforce has been cut in half, and their business could be down for the count. And the firm says its priorities are now to keep KyberSwap's aggregator and limit order functions up and running and to reimburse impacted customers. But the company may not be up for long, so I probably would not use Kyber Network. And like I said, in the past month, KyberSwap has faced unprecedented challenges due to their elastic exploit. Despite this, I'm grateful to say that our core business, including the aggregator and limit order functions, remains robust. Not really sure how much trust they have actually retained or otherwise. Moreover, we will be soon launching our Zap API, an innovative development that will enable dApps, wallets, and other projects to become the most convenient gateways for their users to access DeFi liquidity pools. This development underscores our commitment not only to sustaining our platform, but also to continuing to contribute to the wider DeFi ecosystem. However, due to the elastic exploit, in a move to stand by affected users, we implemented the KyberSwap elastic exploit treasury grant program to cover up to 100% of users' losses. We have also made significant changes in our business operations to ensure that we are well positioned to continue on a sustainable path forward. Regrettably, we have reduced our workforce by 50%. The past few days have been among the most challenging in my journey as an entrepreneur. So indeed, I think they're in a bit of trouble. Probably wouldn't use KyberSwap right now or buy into their coin. Also, Bitcoin Hashrate has hit an all-time high, and that exacerbates challenges for miners because obviously as the hash rate hits an all-time high, it becomes more and more expensive to mine. With the halving coming up, it's going to get suddenly twice as expensive to mine regardless. And this is actually what I was talking about when I said, crypto mining stocks, they might have a risk that Coinbase and MicroStrategy doesn't have, because Coinbase and MicroStrategy obviously doesn't have that cost in order to mine. But crypto mining stocks, I think like some of the smaller ones, may not be able to take that sudden doubling because the price I don't think is going to suddenly double. And, it actually might be like $50K instead of $40K to actually mine a Bitcoin in some places. So realistically, I don't know if it's going to be that viable all of a sudden to actually mine for the smaller companies. You know, Riot just bought 240 million miners, and I think other big mining firms are actually going to do the same. So smaller miners might just be completely squeezed out, and you might see a slight dip in the hash rate once the halving actually comes. It'll be brought back up, obviously, because the bigger miners are going to buy more and more hash rates. But this is also a clue as to Bitcoin mining's unsustainability in the future. So I think I would stay a little bit far from Bitcoin mining stocks if you're risk adverse, obviously, and I just buy Coinbase and a MicroStrategy, maybe PayPal because they have Bitcoin investments as well, maybe even Tesla. I would, because the mining stuff, like there's a lot of costs going into it. The costs are going to suddenly go up. And obviously that does not favor them at all. So that's my thought on it. I mean, if you're like not risk adverse and you want to like get the most ROI, I think mining stocks are perfectly fine though. So that's the news for today. Let me know what you think. Like and subscribe, hit that bell notifications button. Thank you and have a nice day.